Okay, hi, 21st of November. Just looking at the Aussie Yen cross at the moment. This is the monthly chart. Okay, we had this very aggressive, impulsive move down, and then we're in this sequence on the way back up. Nothing to say that this sequence isn't going to pull up in three legs. Okay, I mean at the moment, aggressive move back up, down. So this could be seen as A, B, C. What we do know, okay, obviously looking, we don't want to look too far in advance. What we do know is we are pulling in some quite decent green candles on the monthly at the moment. Engulfing here in September, body engulfing, not full range engulfing. Okay, then October pulled back towards our support level, which was at 7,920, and then pushed up again. At the moment, obviously, got a few days left of this monthly candle to go, but trading towards the top of the candle formation. So still looking bullish. Okay, when we're taking this down into the weekly chart, obviously looking a lot more complicated. A strong move down. This was the impulsive move down. Okay, we've got a double bottom, or a David Beckham, if you want to call it that, and then this move up. Okay, this could have been seen as A, B, C. So you could have had 1, 2, missed out 3, 4, ignored 161.8%, down to 5, then A, B, C, 1 impulsive, 2 corrective, and to be fair to the chart, is looking corrective at the moment compared to this impulsive move down, and then the next wave to be 3, 4, 5. So we've got to take everything into consideration. What we can also see as well, which throws a bit of a spanner in the works for that count, is a 1, 2, 3, 4 to the middle of 161.8%, and then a move up in 5. So there's nothing to say that this isn't a 5-wave sequence, okay, with A, B, and then possibly down in C, and then a rally up. Okay. What we also know is, I'm sorry to try to overcomplicate things, but we do know that an impulsive move down, if it's an ABC correction, then A will be in 5 waves. So this could potentially be 1 down, A, small move down in B, and then a move up in C. So at the moment we've just got to keep our eyes open for this pair and basically just trade what the chart's telling us. And at the moment, even though this it looks like a corrective channel, we are bouncing off support, or we have bounced off support. 3 little inside soldiers here with spikes to the downside showing rejection for our support level. Impulsive move up at the beginning of the month, and then just looking at the daily at the moment, okay, sorry, the weekly, last 2 weeks, very small range, okay, very small bodies of these candles, which is making me think that maybe it's just a small flag formation. Getting back into the daily chart, and you'll be able to see what we're talking about. Okay, weekly showing us a bullish bias, decent move up, okay, corrective manner down to our support, which is 38.2%, hit 2 of our moving average support levels, okay, and then pushed up. We're in the buy zone. Okay, really need to break out of this high, 82.94, to push this pair back up. Okay, and if we do get that break of that previous high, then we really want to be looking. I've just targeted this line here as well, because this was obviously previous support. Okay, so this level first, 83.98, and then a push up to 86.52. So just to reiterate what we've been talking about, very complicated on the weekly, with it looking corrective, but still showing us a bullish bias. Okay, that's what we've got to be wary of. We haven't got any engulfing red candles, etc. We've still got a bullish bias. Okay, so going into next week, okay, a break of the high, and we're going to look at 84, 8600, and then we'll take a view. Really needs to break aggressively lower for us to change that view, i.e. we need a close really below sort of 79.10, 7900 to turn this pair bearish. If it does turn bearish, if we do get an engulfing weekly candle, then the move down could be impulsive, and we'll ride that when we see it. Okay, good luck.